I'm looking for a retrace to this area, which is just below $24 an ounce. And then I think, again, at that point, you're going to make a push up and probably test this high from 2020. And if at some point it does break, that's where you get the big squeeze in silver.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Gareth Soloway from InTheMoneyStocks.com. Gareth, thank you so much for joining us today.
It's always a pleasure, Elijah. Thanks for having me back.
It's great to have you back, and we wanted to have you on to give us an update on the precious metal markets first and foremost, with the crazy week we've seen really 2 weeks ago and then the consolidation we've seen. Do we still seem strong in the metals, in your opinion?
Yeah, so we'll take a look at the chart here on gold, and certainly you do have this beautiful breakout that we have seen. It's what I've talked about going back to kind of December, November of last year, that gold would break out. We have seen the breakout. Now, the question is, what are you doing at this point? And the answer is you basically came up to this double top, right? And so on a technical basis, this is a clear double top. It should push price back down in the near term, which is exactly what it's doing. My estimation is that we're going to trade back to about the 1860 to 1840 range, which would be kind of what we would call a retrace to the scene of the crime, which was the breakout, right? So based on this trend line sloping down, you broke out above it right here. So price should come back right in that range. And once we get there, I think the next big leg on gold does start. I do think it takes out the double top high. And I really think, again, and I said that gold would be the best performer in 2022 versus the stock market and Bitcoin. And I still think that's going to be the case. I think gold by year end will be up significantly from this area. So, yeah, really fun to watch. I love watching the charts play out, and it is exciting. There's no doubt about it.
So it seems like what you're saying is we are headed for a further pullback here. So if people are looking to jump in, would you recommend maybe waiting a bit?
Yeah, I think it depends on your time horizon, right? So if you're someone like me who's a shorter term investor, then you do want to make sure you try to get close to the lows. But if you're someone who has a 5-year time horizon or even a 3-year time horizon, I don't think, the difference of $50 on gold makes that much of a difference. So again, I think in each individual, like I run the risk of missing the trade, but I'm a short-term trader, so there's always another trade. If you're someone who has no exposure to gold at all and you're a longer-term investor, then by all means, I think this is a good area to accumulate as well.
And then your take on silver at the moment.
Basically, silver also had a breakout, a beautiful breakout. You can see same general chart as gold in that it broke above a key trend line. Same thing. For me as a trader, as a swing trader, I'm looking for a retrace to this area, which is just below $24 an ounce. And then I think, again, at that point, you're going to make a push up and probably test this high from 2020. And this high was also tested over here when the Wall Street Bets crowd tried to squeeze silver, and it just obviously didn't succeed. Silver was a much too big market cap for them. But I do think it does test that again. And if at some point it does break, that's where you get the big squeeze in silver. And I think it's important to look at the differences between gold and silver, right? So if we quickly flip back to the gold chart here, gold has already retested its 2020 highs, right? So you have this high up here, and you obviously tested it, and you're pulling back. On silver, you see a little bit weaker price action, which makes sense to me, right? So it's not at the $30 level, even though it's broken out. And the thought process of why, to me, it's because if the Fed is really raising rates, then it's going to slow the economy. And that's going to take a little bit away from the demand for silver, since it's also an industrial metal as well as a store of safety. So just be aware, I still think silver performs well, but there's a reason why the charts are slightly different, from one testing the 2020 high and the other not quite getting there yet.
Now, do you see the next silver squeeze being driven primarily from retail demand for physical silver, or mainly like Wall Street traders?
Good question. That's a stumper. I think my guess is once we break above the $30 level on silver, that's where the retail crowd will really go in. What I've learned in my trading career, investing career, is that smart money, meaning big money, and it's not to say small investors aren't smart money, it's just they don't have as much information. They don't know necessarily the trends until it becomes hyped. Just like Bitcoin, if you look at the average investor in Bitcoin was buying in at 50, 60, 65,000 versus you could argue that bigger money was accumulating prior to that and then selling into them. So I think big money accumulates below $30, and then once it breaks 30, everyone on Twitter goes nuts, and that's where you start to see the small investor really chasing the trade at that point.
No, we also have seen some volatility in the platinum market. Do you have any thoughts on that?
Platinum obviously is interesting with Russia involved in a lot of the supply there as well. The platinum chart has seen quite the pullback here. So the number one thing I would see is if you take this high right down here, that would give me a good basis for where I would start paying very close attention to a major breakout on platinum, right? So this trend line going back to the 2008 highs connected to this high, and you can see you're still about $200 below that level. But on platinum, that's not that big of a move. I mean, we've seen bigger moves occur in a week or two span. So if you can get above this 1230, 1240 level, then you're in big breakout territory, and upside could easily take us to 1800, maybe even back to that 2008 high.
Now, would you say, with respect to what we saw from the Fed last week, would you say that is going to impact the precious metal markets that much?
Yeah, that's tricky, right? I think the markets generally anticipate the Fed decisions. The Fed is generally good at choreographing or giving the market a heads up. Like really weeks before the Fed raised a quarter basis point, 25 basis points, we already knew that was coming. So I think the metal markets adjusted for that. You know, the metal markets are more likely to move on geopolitical surprises like the invasion of Ukraine, at least in the near term. I think the longer term driver, the next 6, 12, 18, 24 months for the metals is really going to come down to, can the Fed get inflation under control? If they can't, then metals are going to go much, much higher. If for some miracle, and I say miracle because I'm a doubter here, if for some miracle they get inflation back to 2% or under, then the metals are going to struggle. But I just do not see that possible, because with the Fed needing to hike here, they're going to slow the economy, and it's going to be they're not going to be able to raise enough to bring inflation down without tanking the economy into a full-out hardcore recession. And so I don't think they'll ever raise that much. I think that the market's anticipating 6 hikes this year. I'd be shocked if they even get 3 in or 4 in before the market gets too low and the economy gets too weak.
We see that inflation is continuing to rise. How high do you see it getting if the Fed can't get it under control?
Yeah, so that's a good question. So I think inflation probably I think the PPI recently was about 10%. So my guess is you see a little bit more upside because of the recent spike in oil. So oil, the PPI number, I don't believe factored in the recent pop in oil because it's usually a lagging something. It's like of the last month. So I do think you're probably going to about 12%. But I do think at that point you'll start to see inflation coming in, and the Fed will be lauded, right? People are going to say, "Oh, look at the Fed; they're bringing in inflation." And it's going to come down to probably 5% or so over the next 12 months. And then I think it's going to start to be here to stay. And I think you have years of higher inflation than the Fed wants. But the problem is the economy isn't going to be able to survive with 4 or 5% or 6% interest rates. And therefore, the Fed is just going to have to figure out, okay, which is the worst case here? Do I want to leave inflation high, or do I want unemployment? Inflation comes down, but then unemployment jumps because we're hiking rates. And it's a conundrum. It's a mess. And it's going to be something that the Federal Reserve is going to have to deal with for years and years to come.
If we do focus again on the Fed's decision, we've seen an impact on 10-year yields. Do you want to share that with us at the moment?
I do have a target price of where I think yields are going to go before we see a bigger pullback. All right, so this trend line here, it goes all the way back to 1994. Okay, you could even argue that you could extend it even further back here, right? So you could even go back to 87, which, by the way, the crash of 87 occurred. And you could argue and say that the Fed was so freaked out that they said, okay, never again. And they've been weak on interest rates ever since. But if you look at this, you're actually getting closer and closer to this long-term trend line. It looks to me to be just around 2.45%. Considering we're at 2.3 now, that's very close. We get one more up day like today on yields, and we're going to hit that. And then I actually do have it priced in that we should head back down to 2.2, maybe 2.15 on interest rates, maybe even lower. In all fairness, looking at the chart now, there's a decent chance that we could even retrace back to the high ones before putting in a low pivot. So you might say, well, what's going to cause that? Well, you could argue that, if the conflict in Russia and Ukraine, if that starts to spread a little bit, the Fed is going to have to be even more cautious on raising rates. If the economy starts to show signs of weakness, they're going to have to be even more cautious. And the market, the interest rate market will start to reflect that by bringing rates down as well. So lots of possibilities here, but the yields are getting to a point where you should expect them to stall out right around 2.45%.
And what impact is that going to have on the broader markets?
Oh, so normally, if you look at the last 2 years, 3 years or so, dropping interest rates has been a benefit to the stock market, right? Stock markets go up when yields are declining. My only fear is that if yields are dropping because the economy is starting to tank and the Fed can't print money to save it because it'll increase inflation to 15 or 20%, does the stock market react like the same way? And I don't think it does. I think the markets are now fully aware that with 10% inflation, you just can't turn on the printing presses again with that type of inflation potentially going higher. So I think if you see yields falling, it's actually could be a negative for the stock market.
And it seems like we already are seeing a negative for the stock market, at least since the beginning of the year. It seems. What is your take on what is happening in stocks right now?
We've had a remarkable bounce over the last week or so. And again, I argued on Friday that the rally last week was options X related. So again, institutions sell a ton of options. Basically, 99% of all the options that are sold to average investors from institutions. So the institutions take in a premium as payment, and they have a reason to make sure that those options try to expire worthless. So after such major downside in the last couple of weeks, the problem is that the institutions were going to lose money on those options. So if you see this major rally we saw pushing stocks up 20, there were some tech stocks that went up 20 or 30% in just a few days. That really helped the institutional case for making money at options expiration. Today, we're starting to see some selling pressure again, which kind of reinforces that is a possibility here. So again, I'm in the camp that this was a false rally. I think that we're going to head lower. I think that the market's in a no-win situation. And if you look at the bigger spiders chart, right, here's your long-term trend, and here's your market on steroids. And we've broken below that as the Fed is taking away the steroids from the market. So it makes a whole lot of sense that we should at least head down into this range for the longer term trend on the S&P.
Which is pretty dramatic. You're looking at probably a 30% drop from where we are right now, or even more. Do you see that as we look at the chart right now, there was that rally, since COVID, that really broke out of that trend. Do you see that as like the blow off top that many people have been looking at?
Yeah, I do. I absolutely do. And what's interesting is if you go back to previous markets where major tops were put in, the same thing occurs. And even in the oil market, what's so fascinating about the oil market is if you look at, let me see if I can bring up an oil chart here. What's interesting about this chart is that oil is following the same playbook from its last massive move up. So if you look back in basically late 2007, the stock market topped, as we know, and then the Great Recession hit. But what's interesting is that oil rallied sharply after that all the way to mid-2008. So the market topped over in this area, okay, but oil continued to rally. If you look at the current price, the stock market topped right around here, and oil continued to rally, right? People were looking for safety, oil obviously up on Russia and so forth. But again, look at the trend line here to here, and then look at how beautiful this bottom trend line is with this point, and this point. So again, this is likely a longer term top on oil at 130 that we recently saw. And I do think that, again, the markets are following the same playbook from 2007 and 8, and you're likely going to see oil collapse and the stock market a lot further downside. Like you mentioned, 25-30% more downside.
And the last market I'd like to cover is cryptocurrency. Bitcoin seems to be kind of in a sideways channel since mid-January. Your take on that?
Yeah, so very quiet in Bitcoin. I mean, if you look at the chart, it's especially recently, it's, initially had these bigger moves here, and now it's kind of getting smaller and smaller. Now, on a technical pattern formation, this is actually a bearish flag pattern formation. So again, just for people to understand, you had a big move down here, and then this is all inside bar consolidation going on, right? So this is sideways chop in the lower range of a bigger move down. If you looked at 1,000 of this pattern on charts at random, you would see that probably 70+% end up breaking sharply lower. So it's just a matter for me of time until Bitcoin makes another leg lower. I'm looking at over the next 4 days for being a key pivotal time factor. So just keep an eye on the next 4 days in Bitcoin. But we may start to see the next leg lower on Bitcoin sooner than expected. And I'm in the camp where I really do think that you're going to take out this longer term trend line, and you could go as low as 20 or sub 20,000 over the next 6 to 12 months in Bitcoin.
All right. Well, Gareth Soloway, thank you so much for your time today. Before we let you go, any last thoughts you had, and where can our viewers find you online?
Yeah, wonderful. So I would just say, just be careful in this market environment. It's a market that's much more volatile than the last few years. So make sure that you're aware of that as an investor, and you're careful because of that. Money can vanish very, very quickly in the stock market these days, as well as in crypto. And then just to find me, you can find me on Twitter at Gareth Soloway. If you're interested in finding me at my websites, Verified Investing Crypto is my crypto website, verifiedinvestingcrypto.com, and inthemoneystocks.com is my stock website.
Fantastic. Gareth, once again, thank you so much for your time, and God bless.
Thank you.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.